Hi there, Shingirai here again with another update on portfolio performance over the past week. On a relatively risk-on week, as investors increased bets that there would be some sort of pause in the series of interest rate hikes, at least coming from the Fed, with main bets being placed that the Fed would be skipping that interest rate hike in the September meeting. We did see some performance, 4 out of 10 of the CBAM portfolios outperforming their respective benchmarks, with returns ranging from minus 0.71% for CBAM 1 down to CBAM 5, returning minus 1.75%. Hypnosis Song's investment trust was up 1.79%, and this particularly interest rate sensitive asset performing well as investors increased bets that there would be a pause in interest rate hikes coming out of the Fed on their September meeting. Then we did see some strong performance as well from the shorter end of duration, with LNG short date sterling corporate bonds up 12 basis points, alongside Royal London Money Market Fund up 0.1% as well on the 1 week. In terms of detractors from performance, we do continue to see those headwinds coming from iShares Global Clean Energy, down 6.18%, underperforming the mutual fund equivalent of the ETF, the Petit Global Clean Energy, down minus 3.06%, and also that thematic trade also being a bit facing some headwinds on the 1 week through the LNG Global Thematic Fund. In terms of a quarter-to-date basis, all 10 of the CBAM portfolios outperformed their respective benchmarks, with returns ranging from 0.42% for CBAM 1 up to CBAM 5 V2 returning 1.13%, with strong performance coming out of Columbia Threadneedle China, MSCI China, and Bailey Gifford China, all up more than 5.6% rather on the quarter-to-date basis. Now, we did see some macroeconomic data coming from China, with exports decreasing, imports decreasing, but ultimately that trade balance improving. And then I think the market has been quite encouraged rather by that CPI inflation reading coming out of China, down minus 0.3% on a 1-year basis, and also producer price inflation pulling back somewhat, down 4.4% on a year-on-year basis, and really Beijing beginning to signal that there may potentially be some fiscal stimulus to support the slowing economy. In terms of detractors from performance, iShares Global Clean Energy down again 7.65%, and we continue to see the headwinds for our thematic sort of positions in the portfolios, down 3.01% from LNG Global Thematic. And then also we saw some headwinds there from Vanguard Japan government bonds, as the Bank of Japan really sort of began to make moves in a direction almost as if to release some of that yield curve control, which had been supporting Japanese government bonds in an environment where interest rates had been rising across the world. Last week, we saw some manufacturing PMI data deterioration across most major economies, but we did see encouragingly some services PMI data coming out of China, encouraging in the positive versus previous readings. And then also the Bank of England obviously moved to increase their base rate by 25 basis points, leaving the base rate at 5.25%. And then this week, we saw, as I highlighted earlier, some trade balance data coming from China and inflation data, but we also saw that trade balance data coming from the United States coming in negative versus previous reading. But what's been most encouraging on Thursday has been that CPI inflation print coming in at 3.2% versus an expectation or forecast rather of 3.3%, with core inflation obviously remaining above the 4% mark, but some investors beginning to speculate that the Fed target of a 2% inflation rate may be possible as soon as late next year. And then we did see some weakness again in the jobs market, also 248,000 jobless claims versus an expectation of 230,000. And then finally from Japan, we saw household spending and also the current account both improving. And then we look forward towards the end of the week, we'll be seeing UK GDP for the second quarter expected to remain unchanged versus previous reading.